Welcome along. We're just waiting for the streaming service to set up so that we go live onto Facebook and YouTube. And as soon as we get the confirmation of that, we will be underway. That we go. Hi, everybody, and welcome along to today's economic calendar and market update for the 1st of October 2020. My name is Paul Botfill. I'm the senior trader and mentor for Actions to Wealth and Online Trading Profits. Welcome along, and today we're going to start off as always with the economic calendar for today. Bank holiday in China, and normally quite a quiet time this where China's closed Thursday, Friday, Monday, Tuesday for the observation of National Day. And at this stage, I do wonder if Mr. Trump may take an opportunity here to have a bit of shot at China while there's not much going on there. And if so, we may see a little bit more volatility than we normally would during this time. It is, after all, election year. Also today, later on, a bit of lower impact news during the day and down to ISM manufacturing PMI at 11 p.m. Singapore tonight. Again, not the big one really, where we're building up to non-farm employment change in the US. Going to be an interesting number. A lot of people are looking for large improvements in the employment number, and at the same time, we're seeing some large companies lay off a lot of people. So those numbers will come in on Friday, and I think really at this stage, now we're through the presidential debate where the 5-year-olds threw abuse at each other for a couple of hours. I think the market will start and look forward to this announcement, and possibly we'll see a lot of stuff waiting and ranging until we get these announcements and get some clarity about where that US economy is in real terms right now. Now, when it comes to the market analysis for today, as I said, look, I think we've got, we talked yesterday about whether the NASDAQ was going to come in and jump into a little bit of a range here. And look, it does have that look about it. We can call this the top of the range. Lots of touches up here, and really, and I'd be prepared to go down and sort of go down here for the bottom of the range. I know we've had a breakout to the bottom, but inside this area looks highly likely between now and NFP, unless we see some kind of unexpected economic news. A break of is at 11,530. And a close above on, say, 4-hourly chart would start and get me looking for a move up and head back towards the highs. But at this stage, I'm not actually expecting that to happen. The S&P 500, still for mine, same as we've got this one, lower highs and lower lows, and that means that I need to be bearish at this point. I'm really looking for another high here to form before I'd actually trade short, and I don't have that. This weird large sort of doji bar has sort of upset that. If I got a reversal bar, I'd be interested in having a look underneath it for a move down. But for now, I'm in wait and see mode. Closes above 34.05 would make me rethink this, because I'll be just heading towards a higher high. Gold, we talked about this yesterday. It's come back and retested the bottom of its range, or even the range part of the triangle, I guess. We've seen a retest of that in a sell-off. I didn't say yesterday if I saw a bar come down off this and close below halfway down this bar, I'd be bearish. So below this bar, the low is 881.36. I'd be prepared to get short and target down here to the 100-day moving average. Possibility of price staying inside this range for the next day and a half seems pretty likely to me. I'll be prepared to have a little play at this. We'll be taking all gold trades off before NFP, given the unpredictable nature of the US dollar around this time. Or we talked about this recently. Again, we've seen this gap here, which the market seems to be obsessed and playing within ever since the gap from March. Going to bring you in a little bit closer to the price action and get my picture out of the way. And we did mention yesterday that we'd had this move down off the top of the range and suggested that you be taking profits down around these sort of levels. We've now seen a pullback up into that area. Look, this is a bar pattern I do find quite bullish. A lot of people don't like inside bars, but I don't mind them for reversal. I just don't have anything for it to be reversing off, and I'll stay on oil again. Low below the bottom of short below the bottom of this bar, and until then we'll be in wait and see mode for that as well. The euro's continued. It's moved. Same thing we said about this yesterday. Reaches the bottom of its range, gave me a selling bar. I said if it closed below halfway down this bar, I would be pretty around the halfway point. I'd be pretty bearish. It didn't close down there, and for now, I expect this potentially to wander back into the range and spend some time back in that range before NFP. Dollar yen. finally gave us the reversal signal we're looking for, but again, sits right in. And these days, these levels, they're often bands rather than complete levels, and we're sort of right on top of this previous support level. And a close below that would certainly convince me I wanted to get short as the prevailing move recently in dollar yen. If this is a lower low and a lower high, could be quite bearish for the currency. But again, for me to be convinced that I need to get a close on, say, 4-hourly chart below my, is it 105.41 level that we're looking at there. The big movers in the last few days have been the commodity currencies. These are Australia, New Zealand, and Canada. And these are also considered to be the risk-on currencies when the market likes the look of a risk in the market. Now, all of them have got some interesting points about them. The Aussie dollar has put in 4 solid days up, and above weekly pivot, I'm prepared to be long. A break below weekly pivot would get me short biased on this, but above weekly pivot, that's 07115. I'd be interested in being long Aussie. We've seen the Kiwi the same. Now in this pair, the Kiwi comes first, the US comes second. So this is New Zealand dollar strength versus US dollar. And again, a little bit of previous level stuff through here. And above 66.02, I'd be prepared to be long on this. And below that, I would change my mind. And dollar CAD. Now, again, this is the dollar first. So the dollar's come down. So the CAD has gone up. This is how currencies work. We do it in pairs. So when the chart is coming down, it means the second one is going up, which means the CAD is going up. And same sort of thing really with the CAD. Some recent support around these levels. Again, down just below a little bit, a bit of a band really. So again, below yesterday's bar, I would definitely be happy to be short dollar CAD. Do hope that helps you with the trading today. I do remind you guys that it's big news on Friday, and I wouldn't be taking large long-term positions into that move personally. In fact, if you're a retail trader and you're not really experienced, I'd be encouraging you guys to be out of the market and taking care of that time. A little bit of trading, a little bit of day trading today, and through to around lunchtime tomorrow as possible. But do expect some markets to be reasonably stalled. And I'll remind you, as always, at the end of the show, that trading's about just being consistent and making good decisions. If you do that, it has a tendency to be able to work out for you. Take care, trade well, and I will see you back tomorrow to having a look at the market before we get to non-farm payrolls on Friday. Cheers, everyone. Have a good day.